baby, there is some weird shit going on in the markets right now. Whether we're talking about small caps, some of the ones that I'm really intrigued by, to the larger index funds, this is going to be a conversation for everybody as we even go down the rabbit hole that is my stock portfolio. So consider hitting that like button because, whew, man, take a look at this. This is some of the weirdest stuff I've ever seen, really. I mean, one of the biggest statements I made early in this year was that if you want security and safety, all these risk-off investors are flooding into the dividends, oil stock, security. That's what you get with the Vanguard High Dividend Yield ETF, which over the last month is up 4.35%. Very intriguing because the S&P 500 Vanguard's ticker VOO is also up 4.45%. If you're looking for a little bit more growth, obviously everyone drives down into the NASDAQ with the QQQ ETF, which is also up 4.28%. I've never seen such an off month where everything is trading so in tandem, yet each one of these ETF buckets are drastically different from the componented stocks that they hold, right? On the Canadian side of the border, VCE is up 3.82%. I mean, you go to China right now, and oh my God, take a look at this, guys. The Chinese market over the last year is down 33.6%, but in the last month alone is up 18.17%. So that's got all these BABA investors very excited. I mean, Alibaba's up 22.98%, back over $100. And the best part about this, guys, is those small caps that got just absolutely obliterated. I mean, we're talking about stocks dropping 90+%. And I kept saying, I think we're nearing the bottoms of the market, and everyone's like, oh, we're not over. It's going to get way worse. And it's just like, you know, you've dropped 90%. What are you going to drop another 90%? I guess we could go to a bankruptcy. But taking a look at the small cap ETF here, VB is the ticker here, guys, is up 8.05%. Now, obviously, if we break down some of the small cap sectors, which we're going to do with the stocks that I'm interested in, it's going to get a little bit more crazy. I promise you that. But a lot of this is all driven by the volatility index starting to cool off. If you don't know what the VIX is, it just kind of represents a lot of the trading volume, and it is now down 30.88%. With all the bad news and all the negative Nancy's and all the people telling you to run for the hills, well, there's blood on the streets. I'm going to continue to tell you to buy, because cost averaging right now, even though if you're broke, come up with any dollar you can, sell your bed if you have to, and sleep on a mattress on the floor. Damn it, this is the time to be buying. I feel like in a year or two, this is probably going to be one of the greatest opportunities you're going to have since the March 2020 crash, right? Now, I haven't updated my portfolio. My portfolio, give or take, is just trading in a tandem, give or take $5,000. I don't see the point in really updating it here at this point. So I've just kind of been sitting, watching it idly while I just continue to finish up those ridiculous corporate taxes. And I've got a good list of stocks I'll talk about when I actually start making the decision to pull the plug and buy, which I'm hoping is going to be sometime in the next week here, folks. But just take a look before we look at these individual stocks and these small caps and the things that got my mind running. Taking a look at the broader markets or just my watch list on StockTwits, guys. Again, very boring. Everything's cooled off a lot. You know, people are like not really freaking out like they used to. We're seeing a lot more stability generally across the board. Again, it's a lot with some of these smaller caps too. Taking a look like the ARK Innovation ETF this month, relatively flat. So there's no reason to be running for the hills right now. Things have really stabilized. Now, from the energy perspective, guys, Enbridge, one of the best performers in my portfolio right now. This one, I probably should have just bought a pure play oil stock. You know, I was buying these at all-time highs somewhere back here. I think like at least maybe it was farther than a month ago. It's been a while anyways, but I was buying them at all-time highs. People were like, oh, you know, oil's going to have its day, and as soon as it drops, it's going to be over for the oil. And I'm like, you know, usually the trend remains your friend, and we're seeing that truly with Exxon here. I mean, Exxon's now up 22% in just the last month. Maybe I should have been a little bit more aggressive on that trend play, but for now, you know, it's intriguing to watch. I think oil's going to have its day soon, and when that starts to correct, yes, I could see the stocks starting to bound to the downside. So maybe it's a good time to consider taking some profit and shifting it into the stocks we're going to talk about here. First and foremost, Amazon had their stock split, guys. Stock split, stocks up 13.06%, really shows that, you know, even though stock splits don't really offer any value, the intrinsic psychological value has driven the stock up. So I'm very excited to see what happens when Google splits, Tesla splits again, all that jazz. But we should really talk about, before we talk about the electric vehicle space, I got to talk about Apple here, guys. They recently announced something that I think it's just stupid. I don't really understand it. So Apple stock's one of the worst performers this month, and they're really dropping. Maybe just listen to the quick clip here. I mean, it might be a little laggard because for some reason it doesn't do the same frames per minute as this video might be, so sorry if it's laggy.
Users love CarPlay. It gives them an easy way to use apps in the car, using the familiar UI from their iPhone. But cars have changed a lot, with larger size screens and more of them to reinvent the in-car experience across all of the driver's screens. Let's take a sneak peek at this next generation of CarPlay.
You've seen it. I'm sure you've seen it. I don't get it. Apple's partnered with a lot of car companies to basically make in-car displays. And I don't know if they have a broader or grander view plan here, some master plan to get involved with the software and electronics behind vehicles, but it has nothing related to self-driving, and it's all optic based. And basically, you just plopping your phone on one of those like vent holders, I don't think really makes any much of a difference here. I just find it so unusual because self-driving is the forefronted topic of cars in the future. That's where the real value is. That's where the the hundreds of billions of market cap value is going to come from. That's what Google is chasing, Tesla is chasing, a lot of other private car companies. And I don't get why Apple has been taking this approach unless it's just a stepping stone to get involved with a bunch of auto companies to maybe expand beyond this. I really don't know, but I think it's a little ridiculous in my personal opinion. It's nothing more than just an extra screen that you can basically just Bluetooth your phone over to and mess around with the dials and customize it, I guess, similar like Apple Watch, phone, whatever. So I don't know what Apple's doing here, but something tells me there's a grander vision at play. Now, speaking of the electric vehicle space here, folks, I really want to talk about Gore's Guggenheim. I've been really preaching that I think if a company's going to do very well, it has to compete at a price point, but have a really good product as well. And I think Polestar, we all, Polestar, you might not have heard of this EV company, right? They're going to be doing the SPAC merger, which SPACs are basically dead, and this stock can't get a glimpse of hope out of the SPAC, but now it's trading back toward its unit value, which makes an intriguing, play if you're a speculator, because this can't drop much farther than where it's at now, because these are unit-based values. It's a holding account, so usually the holding account is usually $9.50. They trade at $9.50 a share plus the warrants. So if they don't end up making the deal with Polestar, you really only end up losing the 5% of the warrants or whatever. So there's no downside risk until this goes public. But what I find really intriguing is Polestar is going to come to the market at a value around $20 billion. And I find this really intriguing because when you look at all the other automakers, whether it's Rivian, which is trading at $26 billion in value, is up 30% this month. Whether you're looking at NIO, which trades at a $30 billion value, up 45% this month. All of these are trading, 50% higher than where currently the value should come to play with the Polestar merger. And I just think it's really intriguing because if we start seeing some momentum plays here, I've told you that if you're kind of a risk-on investor, which I still toy around with when I feel it to be appropriate, I think there's a good chance that if attention continues to come back into these lower cap EV stocks, but I wouldn't really call a $30 billion market cap that low cap. But again, if you can capture that off Polestar, which already has, contracts with Hertz, which is a multi-billion dollar deal, I'm just very intrigued by how the market's going to see that merger when it happens. So I've been debating on taking a position in that, but many of you know I've been looking at things like Google. I've been looking at TQQQ. A lot of you have been asking me about playing leaps on the triple leverage QQQ ETF, and I'm going to be talking about that in a later video. I might even do a live stream tomorrow night talking about some of these higher speculative plays and why it's probably a good time to start playing into them. And if that's something that you're intrigued by, one of my good partners here, I've been working with Wealth Research Group, put together this great article of 1,000% potential gains in some very intriguing stocks. Some of them you may have heard, like Oatly, and some of them I promise you haven't heard of. And if you want to support the channel, it costs you absolutely nothing. I make a tiny commission for everybody that puts their email in here. They get the download, and then they can scroll through and read into this article. And I promise you, I'm going to pull some stocks out of here to talk about tomorrow. So consider helping the channel, consider subscribing for some future updates. And I pass the question off to you at this point. I'd love to know what you think about all of this in that comment section below. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.